This is the briefing for Friday, March 6th. Well, I'm starting to see some real damage to the indices, especially from the internals, based on what's going on with the war in Iran. And I think that we're at some points of inflection points that if we don't see a turnaround pretty soon, we're going to enter into a greater degree time and price counter-trend rotation. Now, I say counter-trend rotation because if we look at the chart on a weekly basis, this happens to be the spiders on a daily basis, but let me switch to a weekly basis. This is a weekly basis. You can see the markets run and pause in all degrees of time. Run, pause, run, pause, run, pause, run, pause, greater degree time and price pause, taking out the previous higher low. And that you can see this rotational pattern that we've been in for quite some time. This goes all the way back. Potentially going back here, going all the way back pretty far in terms of this rotational pattern. And we know that's true also on a daily basis, and I'll get to that in a few minutes. But once we break these levels right through here, which in the spiders is right around the 670 area, that's going to suggest then that we're in a greater degree time and price counter trend rotation. So this goes all the way back. This last one goes all the way back to April of 2025. So it's going to be interesting if we break these, and this is the last higher low. So then that's going to suggest really coming in around the 650 area that we will be in a greater degree time and price counter trend rotation. Now remember that number 650. Well, this number, the 670 number, is important because it breaks this outside of this area of rotation. The real important number of breaking the previous higher low is going to come in right around the 650 area, right through there. Now, looking at the daily chart, this is the rotational pattern we've been in on a daily basis. This is the secondary pattern we've been in, testing the upper extreme of this area of rotation. And you can see we tested 670 a couple days ago right here, tested it again in today's trading. Buyers came in, stopped it from trading lower in today's trading. Buyers stepped in on this day also and kept it from trading below 670. So there is some formidable resistance at the 670 level in the spiders. Now, volume was flat in today's trading, as you can see, but 52-week highs minus 52-week lows is continuing to decline. Breadth is continuing to decline, as is net volume. In the Qs, we're looking at basically the same thing. This area right at the 597 area is pretty critical. Going down to about the 591 area, that's where we broke through this 597 area, and then buyers stepped in and drove price right back up. Did that this day and on this day also. You see volume is increasing. Breadth is basically pretty negative for the NASDAQ, 1,920 shares negative in today's trading, and net volume is declining as well. So there's really some weakness showing in here. This is the Russell. You can see the Russell has broken this 255 area, so the next level of support in the Russell is going to be 245. So it's going to be very interesting to see if we don't see a rotation back up in Monday's trading, that we're potentially going to be looking at a test of 245 in the IWM. Volume increasing on the move to the downside today, breadth decreasing, and net volume decreasing as well. So it's going to be very interesting to see what happens the first part of next week as we see the progression of what's happening in the Middle East, at least for right now. That's weighing on oil prices, and the oil prices are definitely weighing on stock prices. Even in my watch list today, I probably had 98% of the stocks that I track were trading lower as opposed to higher. So it's going to be very interesting to see what happens. In terms of overbought and oversold, we're reaching a point of being extremely oversold in the NYSE and in the NASDAQ. But once again, I want to caution, this does not preclude the market from trading lower on Monday. This can continue to be oversold for a long time, and can get extremely oversold for a much longer time also. So this would give us an indication that potentially there's going to be some type of pause. but I would not put any money on that, at least for right now, because any type of bad news coming out of the Middle East and or an increase in a continuation of increase in oil prices is going to continue weighing on the stock indices themselves. Probably the most important thing now, when we look at the indices, they are weighted, and we can look at the equal weighted indices, but for the most part, what most traders are looking at are the weighted indices, based on the fact that some stocks have a higher weighting within the index itself as opposed to others. But if we look at where we are in terms of percentage of stocks above their 20-day and 50-day moving average, this is the S&P 500. The percentage of stocks above the 20-day moving average and the 50-day moving average, you can see, is declining pretty dramatically. So that means more and more shares are trading to the downside as opposed to the upside. Not a positive in terms of seeing a market begin to strengthen and seeing some type of potential rally in the future. In the NASDAQ, you can see the same thing is happening. This is percentage of stocks above this 20-day moving average and percentage of stocks above the 50-day moving average. Now, one thing I pointed out here, I think I did it twice in briefings last week, is that when this was developing and we were right in this area right through here, I pointed out that this had the indication of a potential head and shoulders top. And you can see that we had one shoulder ahead and then another shoulder. But I caution the fact that it's not a head and shoulders top until you break the neckline. And then you get a pretty good projection of where price should go in terms of the distance between the head and the neckline. Once the neckline is broken, it gives you an indication as to where potentially the stock or the financial instrument will go, because there's typically a high probability of time equality between the head to the neckline and the neckline to the bottom. And if I just kind of did a rough calculation of what that is. So the distance between here and here, if you look at the break of the neckline right here, then that's going to suggest that this distance is about equal where the neckline was broken right here to this distance right here. So we're looking at, in the NASDAQ, the potential to have the percentage of stocks above the 50-day moving average equal about 1,100 shares, which is pretty dramatic. And if we go back, if you look at where we are here in terms of that 1,100, and we look at where price was here, you can see that price on the Qs was down in the 583, the 580 area before we saw some type of bounce. So we could see a continuation of selling the first part of the week, especially if there's any type of bad news concerning oil. This is the percentage of stocks on the IWM. You can see above the 20-day moving average. You can see it is getting ready to test its low, going all the way back to here, which had a low right in the 225 area. And then the same thing with the percentage of stocks above the 50-day moving average. We're going all the way back here to about the 225 area in the IWM. So it's going to be pretty interesting to see what happens on Monday and Tuesday, the first part of next week, and especially if there's any news over the weekend. Now, looking at a little bit shorter term time frame, you can see that this is the 670 area in the spiders, and I reminded you to keep that in mind, that this level is very important on a longer term time frame and a shorter term time frame. Of course, the Qs are holding up a little bit better. They're not testing this lower extreme, so a little bit of intermarket divergence there. But if we break today's low, that's going to open up a potential test of this 592 area, 590 to 592 area. And then in the Russell, you can see we broke this 255 area. And then the next level of support is, as I discussed, on the daily chart. So it's going to be very interesting to see how we recover. Now, one of the things I want to say is that we may be in a downtrend right now. And the real question is what's going to happen if we break through the weekly numbers here. This is a weekly chart of the spiders I showed just a minute ago. So you can see if we break through that 670 area, the real crux of the matter is going to come in at the 650 area, because if that's broken, then that puts us in a greater degree time and price counter trend rotation, because this was the last previous higher low. Going to be a very interesting week coming up next week. Have a great weekend, and I'll pick this back up on Monday for subscribers.